You're listening to the Real Dealz Podcast. What's up, everybody out there in listener land? I am your host, as always, Tucker Merrihew. I want to welcome you guys back to another episode of the Real Dealz Podcast. Well, we are finally rounding the corner out of our what they call season down here in Southwest Florida, where a lot of people decide to kind of vacation down here and remember what forever summer feels like, while wherever they live is cold and rainy or whatever, and they want to come down here, get a suntan, soak up some sun, get out on the water, play some golf, go out and have beverages, all kinds of stuff. Basically, it's like playground for adults, or I call it summer camp for adults. Summer camp with a lot of Viagra, depending on your age, for adults down here. But it's a hell of a fun place to be, I'll tell you that. But during our season, being that this was the first one that we ran an entire fleet of vacation rentals, it took a little bit more time than I thought, but part of that was that I was doing it virtually all myself because I wanted to learn this business kind of inside out and backwards. And I figured now that we have a handful that we run in varying different price points, this would be good for me to kind of dive in this season, run them, and just kind of learn all the ins and outs of the different parts of town, since we've got them in 4 different parts of town now. So anyway, successful mission. We did really well as far as the bookings, the amount of revenue we brought in. We got a lot of repeat people coming back next season, and everybody loved our houses. So it was a good season for sure, and I learned a lot. And that's really part of what this episode is going to be, right? So now that I'm kind of heading out of season, I've got a little bit more time on my hands. We've got one big renovation project we're kind of wrapping up, and then we're going to jump into our next round of projects once that's on the market and going, hopefully to a new owner that'll pay us a nice chunk of change for it, given it's an amazing house, the way that it turned out. It's right by the beach. You could pretty much hit the water with a football if you got a good arm, if you walked out in the street and threw it towards the ocean. But beyond that, I'm going to have a little bit more time. I'm going to put out some more of these episodes. But on this episode, I thought, you know what? This would be a great time to kind of reflect on everything Airbnb, short-term rentals, vacation rentals, whatever you want to call them, right? Since it's its own kind of segment of the real estate business. I've been in real estate for a long time. The last couple of years has been the only time that I've really been completely submerged in the short-term rental aspect of it. I've had long-term rentals for, 20 years. Not anymore. I've rolled all that. Well, I take that back. I actually have one long-term rental here. Everything else we run as short-term rentals. The only reason I'm running it as long-term rental is because it's kind of it's not a shit box, but it's a 2-bedroom, 1-bath, simple house. Eventually, I'm going to tear the house down, and I'm going to build a new multi-million-dollar home in its place that will sell to an end user. But for the interim, it's not really one of those houses that knocks your socks off. So it's near the beach. I guess I could have done a nightly rental on it, but I found some great tenants, and they get to live there for the next year. I don't have to worry about it. They can send me my rent check each month, and then I can run all the other ones to kind of maximize revenue that are just overall much better houses and houses that people want to come here and spend money and make memories and all that. So anyway, that's kind of the plan with that. But getting back to my point is that now that I've been in this short-term rental business, for a couple of years, and, I guess I've been a super host for a while as well. So I guess Airbnb thinks I'm doing all right with it. But beyond that, we've also built our own brand here and a bunch of other stuff. I think that I've gotten pretty good at it. It's an interesting business. There's a lot of amateurs in it. There's a lot of folks that have no friggin' clue what they're doing. But that's real estate in general, honestly, and down here in Southwest Florida, even more so probably than other parts of the country. So I thought I'd do an episode where we really reflect on, or I reflect on all the things that I've done right, the things I've done wrong, what you need to know, what you don't need to know. If you're either thinking about getting into the short-term rental business, or maybe you're running, some short-term rentals right now, and some of the tips, tricks, pointers, and things that I go through here in this episode, you can kind of apply to your own business to try and make it run a little bit better. Because ultimately, I think we've done really well. I mean, we've made a lot of money, rent money, I should say, through vacation rentals. Significant amount more than you would if I had just put them on annual rentals. That's for sure. But I've also learned a lot about, the hospitality business, which is essentially what that is. It's a hospitality business. And so you have to run it as such. And if you do that, it's a pretty easy business. If you don't do that, then it becomes a difficult business with a lot of friction and things like that. So anyway, that's going to be what the majority of this episode's about. I was going to do a segment just purely on kind of market updates, but I don't know that I need to go that deep, so I'll just skim the top here, and that is that, I've been saying since I started recording these new shows that it's highly unlikely that the Fed was going to lower rates before the end of the year. And I stand by that still, although I would say that it's probably even more likely that they don't lower rates until we get into Q1 sometime of 2025 at this point. And that's looking to be more and more realistic in terms of, what their thought process is right now, given the inflationary numbers and just their general outlook on the economy as a whole. So that puts us in a weird spot for probably the next year, let's call it. Maybe not year, but through the end of the year, through the rest of this year, 2024. I don't know. I think real estate's probably just going to doggy paddle. Some areas are absorbing well, some areas are not. There's a lot of days on market. Some areas have a lot of inventory, some have less. So it's very hit and miss, product by product, neighborhood by neighborhood, price point by price point. And I think it's probably going to stay that way, through the end of the year. But anyway, we'll see. But, rates as of today, we're back up about 7.5%, which is definitely the point that kind of broke the back of the market last time around, in October-ish when they hit 7.5%, and then they moved up to almost 8%. Whether or not they keep moving up or not, I don't know. But we're back in that range, we'll call it the, I don't really want to buy a house right now range for buyers, or I don't want to refinance my house right now either, because the cost of money is just so expensive, or I don't want to get a line of credit because the line of credits are super expensive in comparison to what we've been used to paying. So we'll see how all that shakes out, but it looks like I was at least right on the fact that the soonest we could possibly see rate cuts would be the end of this year, but more likely in Q1 of 2025. So that's pretty much my recap on the market. I'll make it lickety-split quick, and let's get into the short-term rental stuff, right? I think you guys can really use this information. I think you can put it to work in your business, and, hopefully it makes you guys some more money. So let's get into it. All right, so you want to run Airbnb rentals. That was a big thing for a while, right? Everybody wanted to get into that. It was kind of the big draw, we'll call it the hot button in this industry, and it drew a lot of people in. Let me tell you, that was probably that was a pretty low barrier of entry. I mean, wholesaling is a low barrier of entry, but running Airbnbs, it had a big allure to the super layman, we'll call it, in real estate, and there were a ton of people that flocked to it. So it's been an interesting ride getting into this side of the business. Not really knowing anything about it. I mean, obviously I ran rentals, long-term rentals for, a decade plus, along with, some tons and tons of shorter-term projects, but I never ran short-term rentals, vacation rentals, until the last couple of years here. And it's been eye-opening. Overall, it's been a great experience, but I've learned a lot, and I've learned a lot about that little corner of the business, we'll call it, real estate overall. And so I wanted to share a few things with you guys that hopefully you find some value in. The biggest thing, I guess, or the place that I should start is who makes up, a lot of this industry, right? Obviously, there's going to be little segments that I don't mention here, but the majority of the industry, who makes it up, right? In terms of the operators, the providers of short-term housing, vacation rentals, Airbnbs, whatever you want to call it. And this is kind of what I've got it broken down to. You've got individual operators, which are, we'll call them the dream chasers, right? The people that kind of, they saw an ad on Facebook or Instagram and they got swooped up, or they heard a podcast about it and they got excited about it. And they thought, you know what, I can do that and I can make a lot more money. And, the same thing as, people that get excited into, flipping houses. But this, for whatever reason, I think renting at a higher rate of rent appeals to more people than renovating houses and fixing houses, because that can seem a little daunting and kind of just above what a lot of people want to deal with. So I think a lot more people got into it. So the first segment of people is really individual operators with limited real estate experience, we'll call it, right? Probably never had any long-term rentals, never flipped any property. They just have very limited real estate experience, and maybe they own a house, right? Or maybe they don't, and they want to buy one for investment purposes and Airbnb purposes. And so those people generally are retail buyers, right? So they're buying something off of the RMLS. They may consider, they got, $10,000 off of list price or something like that, and they think they got a great deal. Us as real estate professionals realize that, it's not, but, I guess it's all in the eyes of the beholder, at least initially. And so you try and go and sell it and realize your gains at the end. But they're really retail buyers, we'll call them. And a lot of them are very highly leveraged, right? They're going in and they're buying these things with, high leverage, debt service ratio loans. And so, they've got a pretty big nut that they've got to cover every month in terms of their interest expense. So that's kind of one segment. The other segment is, we'll call them management companies, and they take over the actual operations of these vacation rental, short-term rentals from individual operators. And some of those individual operators, they may be, we'll call them the retail buyer types, the kind of lesser experienced types. Some may have, a bigger real estate portfolio. They might have a lot of long-term rentals. They just don't want to deal with the friction or setting up the systems for short-term rentals. So then they hand over, the property to a short-term rental company and let them manage it, and then pay them, whatever 20-25%, that they require in order to do that. But they're making more money than they would otherwise, compared to an annual rental by doing that. So they do it. So that's kind of, the second segment of operators, we'll say, and they don't necessarily own the property, but they operate the property. And now there are some, publicly traded companies and funds that do own the properties with, a collection of investor capital, and then they manage them as well. But it's pretty much the same type of thing. You've got these bigger management companies that kind of manage the rentals. And then you've got real estate pros, right? You've got guys like me that, have a lot of real estate. They've been in real estate a long time, and they have a portion of their portfolio of real estate that they own that they operate as, vacation or short-term rentals. And they do that because obviously you can generate a lot more monthly cash flow out of those properties by doing it. So that's kind of the three different buckets, we'll call it, of who is operating and owning vacation rental if you see one, right? So now you kind of know who, which category do they fall into. And so now moving on to, my take on the industry as a whole, right? So, there was a big boom, as I mentioned, a lot of people got into it. I think that we're on the backside of that boom now. I think supply will likely continue to shrink. Some of these big management companies, one of them in particular that's public, their stock price has, gone way, way down in the last year. It's just not as profitable, apparently to manage these at scale as they thought they could make it. And so, I think it will continue to shrink as those companies kind of have a rough time figuring out how they're going to make money and meet expectations, sort of like the, Open Door and stuff like that had a rough time with it. I mean, real estate on a residential level is very difficult to do at mass scale. Now, there are companies that do it, but it's not easy, as a lot of these companies have found out. I think some other individual operators will likely sell or convert to long-term rentals. Some of these, layman types that, it's just too much. They're not business owners anyway. They're not real estate people, but they got into this because they thought they could make more money. They really don't like interacting with people that much. And so they'll either sell if they can without going backwards, or potentially convert them to long-term rentals for the interim until they can sell at a break even or a gain in the future. So I think that's a strong possibility for a lot of the inventory as well. And like I said, its popularity has peaked for the time being. So I don't think you're going to get a big rush of new people coming in. And ultimately, I think that means that probably Airbnb's stock price will probably continue to go down over time. But, don't quote me there on that. Now, with all that said, I don't want to paint a bad picture of the industry, because I think it's actually a great opportunity if you're a real estate pro, right? If you're somebody that, has built real estate businesses, understands real estate, understands rental properties, you can kind of come into this space and you can just kind of have your way. Honestly, it really is a very simple space at the end of the day. And I think, people overcomplicate it just because of their lack of experience in real estate, and they make it a lot harder than it really is. And so as a real estate pro, I really enjoy this space because, you can kind of climb to the top of it in any given area pretty easily, just by having kind of real estate common sense, which, we take it for granted sometimes. We've been in real estate for a long time, but the average person that maybe owns a house, never had a rental property, or is just getting into it, they just don't know all these kind of intangible things that you learn along the way when you've been in real estate for a while. So I think it's a great opportunity for the real estate pro type to kind of be in that segment of the industry, and that's why I continue to have us in that segment, and we will moving forward, as much as it's comfortable to do so. So definitely a positive overall. Now, as a real estate pro, let's say, I don't want to pump up my own ego, but let's just say as a successful operator, right? Over the last 2 years, I've been dubbed a super host many times, which honestly, it's a pretty easy thing to do. It doesn't take, a whole lot of skills. It's just common sense and running a good business. But let's call myself a real estate pro for the sake of, Airbnb believes I am. So I guess that's good enough. But from my vantage point or my perspective, let me give you some of my biggest takeaways after 2 years in this space. And, some of these things were harder lessons to learn. Some were easy lessons to learn. But I'm hopeful that you guys will take some value from them. And if you do get into the space, or if you're in it right now, you can kind of apply it to, what you're doing. The number one rule that I will say, and this has been kind of the biggest gripe on a lot of the vacation rental groups, we'll call it, on Facebook, where people are saying, oh, my occupancy is way down. And, of course, at the same time, behind that, they've got their debt service, which isn't getting covered, and it's probably a net negative every month. And they're having to deal with, the few nightly people that they can get. And it just becomes a lot of friction. But the reason why a lot of these people are having issues with their occupancy, or the first part of the issue, there can be many parts, but the first part of the issue is, if you buy properties that are great properties or great houses to do this with, it's really easy to keep them occupied without, giving them away price-wise per night. People like to stay in nicer places, nicer houses. When you buy these kind of fringy houses, in areas that are okay, and you're wondering why, you're not getting the occupancy numbers that you want, and then you have to start to drop price to a super low number to attract anybody, that's just a recipe for disaster. And so, anything that we keep to do as a vacation rental, or a nightly rental or whatever, I want to make sure that it's a great property. I want to make sure that it would appeal. If I was going to sell it tomorrow, buyers would be like, this property's awesome. And if you keep that mentality when you're putting these properties into your short-term rental portfolio, you won't have a whole lot of problem keeping them occupied. Now you can do other things that could screw that up, but that's usually the biggest hang up. And if you can avoid that, you can fix the rest of the stuff. If you don't do that right, you can't fix it, right? So that's one of those things that if you do it right at the beginning, you can fix everything else around it. The next biggest takeaway I'll give you is that, if you're going to use the platforms, which you're going to have to initially, be using Airbnb, VRBO, those are kind of the two big ones. I will tell you this, Airbnb is significantly better from a operator perspective than VRBO. They have a little bit different type of clientele as well. VRBO tends to be older people, a little less riffraff, but the interface of that platform is terrible in my opinion. I can't believe they run Super Bowl ads and they haven't fixed their damn platform so that it runs more fluidly, and it seems very archaic for as long as they've been around. So personally, I hate getting on VRBO because it's annoying to use in comparison to Airbnb. Now Airbnb has some things about it that I don't like either, but if you were to compare one to the other, Airbnb is far superior in terms of just the tech and the usability as an operator and an owner that's got a rental up there. So definitely like Airbnb a lot better. So I would say we get the majority of our renters from Airbnb. We have, since we've been doing this now, some people say it's the other way around. I don't know why that would be the case necessarily, but some do. But I'm glad because I don't like using VRBO nearly as much. The other or the next thing I guess I want to mention is, obviously platforms are key to the initial splash into the market, right? You have to use these platforms in order to connect you with the buyers, right? Or the people that the renters, will say it, the vacationers, whoever it is that needs a nightly rental or short-term rental. And so, you kind of have to pay to play. There's ways to minimize what you pay them as much as possible, but you basically get on these platforms, you pay them their piece, and then you get connected with people that want housing, right? And so what I've found is that, we've had two types of houses. We've had, the house that we had in Lake Oswego, we ran that as a vacation rental, and we have all the houses here in Naples and Bonita. And there are two different types of people that go to each of those. And so I'll kind of explain the difference here in a second, but ultimately, the reason why you use these platforms, if you're in a market that people come back to over and over again, you're in a place like Naples here, for example, that people want to go back to over and over again, or, you're in, Nashville or places like that, right? That, they have a continued draw for people to come back and spend money and make memories, right? If that's the case, really these platforms are meant for you to connect with the best renters that you can find. And then once you connect with them, you can have them booking directly with you after that. If they're not a great renter and they're a pain in the ass, they leave a mess, they're disrespectful, forget it. I don't want anything to do with them. I won't re-rent to them. I'm looking for kind of the best of the best people. And fortunately, I'm in one of those markets where I can do that because we have, a lot of people that come here over and over and over again, spend money and make memories, right? And they like familiarity and they love our properties. And so, for example, next season, I have most of my houses booked out already with repeat guests. And they're obviously booking them directly with me. And the first part of that experience is that they enjoy the houses. Second part of that experience is that they enjoy their interactions with me and the company. And so, again, easy things to do, if you set your business up that way. But by doing that, I've already got, significant amount of occupancy going for next season, and we're at the end of this season already. And that's only year 3, right? It compounds on itself over time. But, in Lake Oswego versus Naples, there aren't a whole lot of people that go to Oregon to spend money and make memories, right? Most people go there to visit family, go to a wedding, graduation, something like that, some type of an event like that, which generally happens once or once in a blue moon. They're not coming back over and over and over again. And so, all the time that I ran my Lake Oswego vacation rental, I didn't have a single repeat tenant. Whereas here, I've got one guy that comes in from Vegas, every other month. He's probably stayed with me 8 or 9 times now, and he's got 4 more on the books. So it's very different, and I like that better because, again, we can control the quality of person that comes into our house, and ultimately on Airbnb you can control the quality of person as well, significantly better than VRBO, because you're kind of blind on VRBO a little more so than Airbnb in terms of who you're renting to and just whether or not they're going to be worth the money, we'll call it. All right, so the next thing I want to mention is, what can you really make, on a short-term rental versus an annual rental? Like, is it worth putting furniture in and silverware and all the amenities that you need in a house so that people don't complain, and then dealing with questions, concerns, challenges occasionally as guests come and go? What is it that you can actually make? And so here in Naples, you're probably at a 3 to 4x on a monthly what you would make, probably closer to 4x during season. And then if you were to average it out over the course of a year, you're probably 3x-ish, slightly on the downside of that maybe, in terms of what your annual cash flow is coming out of that rental, versus if you put it on an annual rental and you just collected the check every month. So you're about 3 times the revenue that you would get short term versus long term, which to me, that makes it well worth it, for sure. And it's been a great thing. So that's kind of what you can expect. I mean, there's some bumper crop markets that may get more than that, but that's about the normal, I would say, at least what we're seeing here anyway. The other thing I want to mention is, how I set up my vacation rental business from the beginning, right? So when you start out and you put stuff on Airbnb or VRBO, you're just like a single solo operator, let's say, which that can be challenging, right? That can be, do people trust you? You may have a great property, but they want to look at the reviews, and they want to make sure that you're trustworthy and that you have all the things that you say you have and the house is taken care of. And so what I did is I actually created a brand, and our brand is called TTM Luxury Rentals. And so everything that I put out from the very beginning was under a brand, and not an individual. Now, I was the contact host, but it was under the brand, and that helped really propel us quickly, and it inspired a lot of trust in people. Now, our properties were great too, but we had a lot of people book right out of the gate, that we probably had a lot more trustworthiness by doing that. So that's probably a good takeaway as well if you want to get into this. Now, here's what not to do, right? I don't want to go on too long, but here are the things that you definitely don't want to do. Number one is make sure that you set the night minimum at 3 or more whenever possible. If you set the night minimum at 2 or even 1, you could be in for a world of hurt, especially with people that you're simply booking off Airbnb or VRBO. You may get some people that are just traveling through town that are very simple, but you'll get a lot of the riffraff there as well. People that just want to party or do all kinds of weird shit. Because let me tell you, I've heard stories of all kinds of things where you're like, what in the world? But people are weird, man. People can be weird, and so 1 or 2 nighters, I just don't do them. It's just not worth the risk, and it's not worth the money at the end of the day. It really isn't, and you don't have to. So I don't do it. Some other people disagree with me on that, but I don't do it, and we run a pretty successful operation without having to do that. So I don't go into that world. The other thing is that when you do lower dollar per night rentals, that same type of thing happens, right? You get the riffraff, the younger people, the partiers, the people that don't take care of your house. They break the rules. They show up with 12 people and they say there's going to be 3, all that stuff. So you can avoid that by staying in kind of the higher dollar rents per night properties as well. And so most of ours are just that. And so it keeps a lot of the riffraff out. I mean, our higher dollar rentals are well-to-do people. I mean, we've got people in one of our houses, for the week, this week, they're paying $8,000 for 7 nights. So you have to be a certain type of person to do that. And, generally they're pretty good people. So that's a good tip for you. Another one is don't be afraid to be firm with people, right? When guests ask questions or they try and push you around and say that they want, early check-in or they want this or they want that, you have to be firm with people. Obviously you want to be accommodating and be a good host, but some people just like to push and push and push and push, and you have to be able to identify them. They're kind of like your pain in the ass long-term renters, right? That they call you up on a Sunday because they clogged the toilet and they want you to come over and unclog it, right? The same type of people exist in the short-term world. So identifying those people and just not letting them suck the life out of you is important, because they probably won't give you a great review anyway, even if you went over and broke your back for them. So keep that in mind. Let's see. The other one is don't rent to most people who are in town for sporting events. That's a big one. I learned that one the hard way a few times. I will never rent to anybody that comes to Naples on a football tournament with multiple kids. I will never do that again. And I will never rent to a mom who is coming into town with multiple kids for a soccer tournament. Just bad idea. The kids end up running wild. There aren't enough parents to manage them, and ultimately kids cause the most damage of anybody in our houses by far. So every time I get somebody that books with multiple 2-3 kids, I give them a very stern message from the beginning that says just that. Kids are the reason why we have have had the most damage in our houses. I have one of those children. I understand how children can be little hurricanes, which my son is. But by doing that, I've been able to curb it a little bit. But more than anything, if you're in town for a sporting event or sporting tournaments and there's multiple kids staying in one house and or multiple families with lots of kids, nope, move on. You can rent somebody else's house. So that's a big thing for me. Another one is, make guests disclose who all the guests are. And I even send a message out now where I say, look, if you didn't disclose to me not only how many people are coming, but who the guests are properly, in your initial booking, and I show up and it's different, you're getting the boot, or you could get the boot. And that's enough to scare people into kind of being truthful with you and not trying to pull one over or add a lot more people that they said weren't going to be there. So I would suggest doing that as well. The last thing would be, I think a lot of people jump into trying to use too much technology too quickly with this business. It's a very simple business, but they want to get up on Airbnb and VRBO, then they want to get on a platform that automates putting them on those platforms, and then they want to use something that automates the pricing, right? So it's like smart pricing, and Before you know it, you're completely detached. Like, you want to learn the pricing in your market inside out and backwards before you integrate any sort of smart pricing, so that you can look at it and tell whether or not it's right or wrong. Because in Naples here, for example, the pricing is so dynamic. It's literally week by week through season. And then it can be, it's month by month. It changes dramatically after that. So I go through and I do all of our own pricing for the year, just because it's too dynamic for me to rely on any sort of software. I don't want to do that, but also I want to know, I want to know exactly what, the competition is doing. So I kind of look at the competition and then I price accordingly, and then I continually adjust over time as well. And then I know exactly what things are running for my market, and I'm not relying on some software to do it. So, but that's always how I've been. I've always wanted to know, real estate wise, like what's going on, what's selling, what it's selling for, who we're buying from, who we're selling to. In this case, it's just, who we're renting to and what should it rent for in any given week, in any given month. And it kind of follows a pattern too. Now, in Lake Oswego, it was kind of a set it and forget it thing. So if you're in a simpler market like that, you definitely don't need a, pricing software, because I kept it at the same price throughout the entire year, and it rented the same throughout the entire year. So, but again, that's not a vacation market. So, maybe I could have pushed it a little more in the summertime there, but it was a pretty stagnant market in terms of pricing in comparison to someplace like Naples. All right, so hopefully that was some good tips, some good things to keep in mind when you're doing this, things not to do for sure. I'll wrap it up with this. Like, why do I like vacation rentals? Because I got into this part of the industry not really knowing whether I like them, dislike them. I was just interested, and obviously I knew you could do pretty well, rent-wise compared to long-term rent. So I thought, you know what, let's get into it. We'll see what it's all about. And if I don't like it, we can bail out of it. If I do like it, we'll stay in it. We're going to stay in it. I think it's a great segment of the market for a lot of the reasons that I mentioned earlier. But the biggest things are flexibility, right? I've got a lot of houses here. I've got a lot of people that come in to visit, and I can put people up in those houses very easily. It makes the trip fun. It makes it fun for us, because not everybody's staying in our house or staying in another house, and it's just a great experience for everybody. So I've got flexibility to have a lot of guests here as I want. And so that's kind of a cool thing, living in a vacation area now. Definitely is. Another thing is, I've met a lot of really great people. I really have. Now, some people I wanted to, put my foot up their ass, but I'm not renting to them again. But they're definitely the minority. The majority of people are just really great people. And, I've always loved being in real estate, because I like meeting people, talking to people. Obviously I went and sat on people's, smoke infested, cat shit house couches and negotiated contracts. And obviously I didn't enjoy staying in that house forever, but obviously I didn't hate it either, being there and kind of making those deals. Otherwise I wouldn't have done it. This is a much cleaner version of that, we'll call it. But you meet people, and a lot of the people that we rent to are, they're pretty cool people, and there's some pretty well, accomplished people. And I've just met a lot of, we'll call it good people doing this. So it's really good in that regard. Much different than just, your longer term renters, I would say, especially in a market like Naples. And then lastly, the money, right? We're probably, 3x on an annual basis what we would get for, long-term rent each year versus short-term rent. So it definitely kicks off a lot more money. And, at the same time, if I ever want to sell one, I don't have to wait for a lease to expire and then market timing and all that. So, again, that goes back to the flexibility part. But, overall, it's been a great experience, and we're going to continue to do it. So if any of you guys out there listening have any additional questions, feel free to reach out to me if you want. There's a ton of other things I could say, but I don't want this episode to go too long. But overall, I had some great friends kind of give me some pointers as I got into it. And so hopefully the pointers that I gave you today are, ones that you can't just read on a blog or something like that. They're, be a little harder to find this advice, but you can use it as you kind of venture into that world. So hopefully you enjoyed it. Hopefully you can put that stuff to work, and, you can use the things that I use to be successful and avoid the things that I shouldn't have done the first time around. Okay, what'd you guys think of that episode? Hopefully you got a lot of value out of it, and you're able to put some of that stuff to work in your own business if you're going to run some vacation rentals. Now, before I leave you guys this week, as always, I want to kind of highlight another one of the good guys of this business. And this individual is somebody that I actually applaud, and at this point, I look up to him. When he first came into kind of our world, we gave him a little bit of coaching. We taught him how to go direct to seller. We taught him how to kind of shift his mindset from just being a realtor to being an investor, and then to being a builder. And now he's building some pretty amazing homes in one of my favorite places, Boulder, Colorado, a place where I lived for 5 years. And he's got just a really cool operation going on. He's also a realtor, so he lists and he sells a lot of his own stuff, but he's also figured out a way to go off market on a lot of his acquisitions. And then his end products are pretty amazing houses as well. Obviously, the market, he's selling them and they're high dollar. So apparently the market agrees that that's the case. But he's a good dude. His name's Dave Janis, Janis Property Group. If you happen to be in Boulder or you're in Colorado, look him up. And if you do, I'm sure he'd be happy to lend you his ear or give you some advice, whatever. But he's one of the good ones. So make sure you check him out, and congrats to him on the business that he's got going. So that's it for this week. Oh, one other thing. If any of you guys in listener land want to engage with myself and our community a little bit more, you can always reach out to us about joining the Deal Finders Academy or the DFA. It's been around for over 10 years now. We've got a lot of members. We got a lot of legacy members, and just a lot of great people in there. But it's a way for me to connect with you guys as listeners, to kind of help you guys along your journey. And as you join, obviously we give you access to our group where you can kind of interact with everybody, but I also do one-on-one coaching calls with everybody as they enter the group to kind of get you pointed in the right direction, so to speak, when it comes to, whether it's, building out your business, going direct to seller, some of the nuances of both of those things, or everything in between, in terms of, renovating, wholesaling, and then building, of course, houses, up to multi-million-dollar houses like we do. If you want to go set up a call for that, just go to thedealfindersacademy.com, or you can email us, info@therealdealspodcast.com, and Dan will get back to you, and we'll set up a call, and we'll see if it's a good fit. So that's it for this week. Hopefully you guys enjoyed it. I will see you guys back sooner than the last time because, like I said, I'm now out of season, so I'll be getting back on this microphone a little bit more. But until then, I'll see you guys on the next one.